This is chaos. We're listening to what is happening here. There is very little information. The bookkeeping looks like it has been, well, not done particularly well. Kristin Johnson, what do you make of this so far? Just kind of put on your lawyer's hat and give me a sense of what you are making of how this story is unfolding.
Thanks so much, Alex and Guy, for having me. I agree with you. The continuing revelations related to the cascading crisis in crypto markets is deeply disturbing. And it really underscores the necessity to a fresh commitment to our core principles and to market reform. What I'd highlight really quickly at the outset of this conversation is that there is an entity under the umbrella of the parent company, FTX US Derivatives, that is a registered derivatives clearing organization in our markets. That DCO, LedgerX, as best we understand, based on the fact that we have boots on the ground and are directly engaged in a continuing conversation with LedgerX, all customer assets, customer property is accounted for. It is almost a case study that we could juxtapose with the empire, I think Sonali described it as, in the context of FTX International, where an imperial CEO would have the capacity to ignore corporate governance and risk management measures if those are the facts. In the context of our registered DCO, the market participant that we directly oversee, not the case at all. Definitely, we have ensured the imposition of corporate governance and risk management measures, required liquidity reserves, which ensure the integrity of that entity, and protected customer assets, which is our duty. We are a cop on the beat with respect to every registered entity that we oversee.
So to that point, for example, Grayscale Trust, and I appreciate this might be more of an SEC question, but the Grayscale Trust has gotten hit. Its NAV is super discounted. People are just worried, and they're not trusting the auditors, basically. So what do you have to say for those that are 100% regulated in the U.S.? Are those assets safe?
So entities regulated directly by a U.S. federal regulatory agency would be subject to a set of obligations, including expectations that customer assets would be segregated or separated, would not be reinvested in a way that threatens the principle of those assets, and would be protected in the context of bankruptcy. What's complicated and probably frustrating, I can appreciate this, for the general public, is that when entities are organized outside of the United States, subject to a regulator, not U.S. federal market regulator, SEC or CFTC, we may have limited capacity and almost no visibility into the activities of that entity. So here, thinking just again about FTX, for FTX International, our visibility into the activities, corporate governance, use of funds, personal loans, extended use of assets, customer funds included, would have been very low visibility for sure in the context of the entities organized outside the United States.
Yep.
And so that's, I think, the best yardstick to measure the answer to these questions.
Yeah, and just before FTX blew up, the CFTC was giving serious consideration to an FTX proposal to offer direct clearing of crypto derivatives. Do you think that any of the regulators really understood what was happening here? And if not, why not?
I'm so tremendously grateful you asked that question, because I think in the immediate moment you hit the nail on the head. One of the biggest issues at the core of this cascading collapse of firms is the market structure. It is certainly and most obviously the regulatory gap that is inevitable in light of the fact that we need federal congressional action that explicitly directs the CFTC and the SEC as to how Congress would like for us to proactively and directly regulate in the cash or spot market for cryptocurrency. So that's a true and relevant fact. But you raise a second point that I think should not be missed, and that is with respect to direct clearing. The LedgerX platform, the DCO I mentioned earlier, is a direct clearing entity. something I'm asking the chair and my fellow commissioners to support me in, which I believe complements the possibility of federal legislation in the digital asset or cryptocurrency space, is a set of formal rules governing direct clearing organizations. For the LedgerX platform, contracts were fully collateralized, mitigating the possibility of risk and containing the likelihood of any contagion in the event that there were risk management failures at that platform. But we don't have a formal set of rules adopted to indicate to all market participants who might apply to act as direct clearing DCOs what rules they might have to abide by. So the LedgerX order entered into by the Commission in 2017 is a good roadmap, a good starting point for the Commission to begin to take action now. I know that our sympathy for those who are mourning devastating losses, financial losses in this moment is all too little. So let us find a way to begin to take action today.